Hey, what's going on, everybody? Friday, TGIF, June 4th. We just had a unbelievable thunderstorm here, man, with hail and everything. It was wild. All right, market bounced back today on a jobs number that came in a little bit below expectations. I think it was like 559. They were looking for 650. We had the ADP payroll number on Wednesday. That was up at 978,000. So I guess this, alleviated some of the fears of higher interest rates. Bonds rallied, yields came down. And anyway, overnight rates are basically practically at zero. And I've been saying that as long as the Fed stays where it is, rates are going to converge down. They're going to go down. I've been all through this before. It's not about inflation. It is about Fed policy. Anyway, what I want to talk about today is maybe some of you have been following these developments on Basel III. Basel III is a new regulatory regime that comes out of the Bank for International Settlements. That's the bank in Basel, Switzerland. It's like the central bank for central banks, all right? And they have put together a new set of regulations that will be applied to commercial banks. Actually, this goes back to the last financial crisis in 2007, 2008. This was an outgrowth of this. They wanted to implement a new regulatory regime that would hopefully stave off another one of these Lehman episodes of banks going under and make sure banks are well capitalized, whatever. This thing's been, look, this thing has been in the works for a long time. Let's put it that way. It was supposed to be implemented in 2018. It got postponed, and then we had COVID. Anyway, it's here now. What I'm going to talk about, and I'll be honest with you, I'm not fully clear on the whole thing. It's kind of confusing, and it's very hard to get precise information on it. I mean, I went to the Bank of International Settlements. I read some of their PDF, some of their documents on there. It's just like, it pertains to gold. And some of you maybe have been hearing about this. Now, I mentioned it, a couple of years ago when it was first put forth that gold would now become a tier 1 asset. A tier 1 asset means it would be in the same category as like treasury bonds and bank reserves and cash and coins and that sort of thing. Before, gold was not a tier 1 asset. Now it is. So banks can hold that as and account for that as the highest quality collateral, the highest quality asset. Now you might say, oh, that's great. Banks are going to be buying gold like crazy. There's a catch to this. There's a flip side to this, which is really kind of the confusing side. At the same time, banks that are, bullion dealers, or who also participate, they're called bullion banks. These are basically the major big banks, JP Morgan, etc., that participate heavily in derivatives. The way the derivatives, futures, other derivatives, swaps, contracts, those contracts, which oftentimes, or up until now, those contracts were considered like having gold, but it was called an unallocated position. It was just like paper gold. They're going to have their, I guess you could call it the margin requirement or the financing need boosted way up. So it's going to become much more prohibitive for these bullion banks who deal in the derivative contracts to conduct business. It's going to be more expensive, basically. And the prediction there is that the derivative market is not my prediction. This is what I've been hearing. it could put major constraints on the paper market in gold, the derivatives market in gold, the futures market in gold. This could dry up liquidity. It could raise financing costs. It looks to me, and let me just add one more thing, for physical gold now becoming a tier 1 asset, banks basically are going to take a 15% haircut on that. In other words, it'll be collateralized up to 85%. In other words, like the Fed would lend against that up to 85%. I think the Fed lends against treasuries up to 95% or something like that, if I remember correctly. So it looks to me like it's kind of going to squeeze this new rule, which, by the way, goes into effect at the end of this month, June 28th, for European and I believe US banks. UK banks have to comply by, I think it's January 2nd, 2022. But a good swath, a good number of banks are going to be subject to these regulations at the end of this month. It looks to me, and again, I don't think anyone has a strong handle right now on what the outcome is going to be. I've seen arguments on both sides that this is going to be like super bullish for gold. And I've seen arguments that the drying up in liquidity in the paper market could also have a negative impact on the gold price. It seems to me like this is going to drive more action in the physical. And we don't know how much physical is available right now. Now, obviously, all the gold that has ever been mined since the beginning of time still exists, okay? It's not like oil. You don't burn it and it's gone. So obviously, there's an enormous amount of gold out there, but it's in the form of jewelry, it's in the form of coins, it's in the form of some people's safe deposit boxes. I mean, at some price and under some conditions, you could have a big chunk of that supply come on the market. But as far as right now, what's out there in terms of available physical supply, we don't know. Here's another thing, okay? If this is a tier 1 asset, and remember, the tier 1 asset factors into the bank's leverage ratio, and they want to have that leverage ratio very high to make sure they're well above regulatory mandates, all right? If the price of gold goes up, that increases the bank's leverage ratio, all else equal. So it's kind of like in the bank's interest right now to see the price go higher. That doesn't mean they're gonna, boost it up, but it seems to me they would be less inclined to manipulate or keep the price down or suppress the price. So I just wanted to bring this to your attention. At the end of this month, this is a big change. I don't know. I think the best strategy for this right now is to wait to see what the reaction is, if any. And I don't expect that, June 28th hits and all of a sudden, boom, there's some huge move up or huge move down. It'll progress, but we'll get some tells, we'll get some signs, we'll get some signals as to what is going on. I just wanted to bring this to your attention. I think it's it could be a big deal, maybe not, but it is a major regulatory change that affects the status of gold. One more thing. 2 countries now have been, well, a number of countries, but Russia, big buyer of gold, has been boosting its gold reserves. The story yesterday is they sold their last US dollar holdings, and China too. And Russia and China, they've been getting real close, cooperating in things like trade, commerce, even, military cooperation, boosting their gold holdings. So I don't know. We'll see what happens. But it's an interesting story. You could look it up. There are quite a few videos on YouTube that deal with the subject. But again, the commentary and the opinions, they're like all over the place. So good luck in trying to find it. If I get any more information, I'll let you know. I'll keep you updated, but interesting story. Anyway, have a great weekend. I'll try to get to you with some new videos over the weekend. Take care. Bye-bye.